chairs are just sitting on right now.
Welcome to One Share Podcast. Fun things first. None of what you will hear is financial advice. This content is for educational and entertainment purposes only. Okay, so Metaplanet had their Q2 earnings call on Wednesday. So I thought it would be a good time to have a look at Metaplanet today. It's probably a good change of pace considering that we focused on strategy quite a lot over the last few episodes. So let's have a look at the key takeaways of their Q2 earnings presentation. The first thing that I want to have a look at is their agenda items of the upcoming shareholders meeting on September 1st. And here I can already share a slide from their presentation. So there are three main items planned for their shareholder meeting. And we can see two of them here. The first one, which you can see in the upper half of the slide, is the approval of additional shares issuance. And they want to add an additional 1.1 billion shares. So that's common equity and preferreds all together. And this is necessary to accommodate for their ATM-like vehicle and the issuance of their new preferreds, as we will see shortly. The second item that is not mentioned here, but is quite interesting, is that Metaplanet wants to be able to have the calls and their shareholder meetings online. So they need to have approval from their shareholders because of the regulation in Japan. So in Japan, if it's not stated specifically in the articles of incorporation, you cannot just have the shareholders meeting online. And I think that's great because there is a big retail investor base interested in Metaplanet. And these online calls and shareholder meetings will contribute to enhanced communication coming from Metaplanet. But I also like to see the transition of investor relations to the 21st century, basically the same way that we've seen strategy transition. And I think it also will bring some additional investor interest if people that are not invested can see those calls and see how Metaplanet communicates and how they basically deal with investors and what their plans are and how transparent they are. So I think that's just great for marketing as well overall. Right, so the third item, the new preferreds, which we discussed a week ago or so. This is the second half of the slide. And in my opinion, that is the most interesting item. So I want to focus on it more. But before we go any further, let's maybe have a look at what I've already shown a week ago or so. So let's look at the main features of both preferreds, Class A and Class B. All right, so based on the last slide, we are now able to know what the pricing of each preferred will be. So since they want to issue 277.5 million shares of each, and we know that they want to also have an issuance of 277.5 billion yen. So that makes that they will be pricing each share for about 1,000 yen, so roughly $6.75 per share. The dividend rates were not presented, so it looks like they're still aiming to have an up to 6% annual dividend rate. Class A will be senior to Class B. Class B will be senior to the common share. And I think the last interesting aspect here is Class A will not be a convertible, whereas Class B will be. We still don't know the convertibility ratio yet. So basically how many Class B shares for a common share. So before going deeper into the preferreds, Metaplanet set up the stage on why the preferreds are now part of their strategy. And there, I thought there were two interesting slides for this. So the first one that they presented was the slide where they mentioned the total addressable market for the Metaplanet securities in the Japanese market. So the total addressable market for the equity is about $6.8 trillion. The money supply is about 8.32 trillion. And here, what is not to be overlooked is the amount of household cash, which is $7.6 trillion dollars, and that's a whopping 91% of the money supply. So that's crazy. And then the fixed income is about $9.5 trillion dollars, so a total addressable market for preferreds overall of $17.82 trillion dollars, and that's just in the Japanese market. So imagine the market if they expanded, but more on that later. And they also pointed out in this slide that at today's prices, it would roughly take $20 billion of funding to get to their 2027 objective, right? I think we all know that that's going to be a lot more because of the price of Bitcoin rising in the near future, and the price is just going to run away from Metaplanet eventually. But the point here is that they're trying to say that the Japanese market has way enough capacity to fund their 2027 objective, and actually much more. So I thought that was an interesting point. The next slide that goes along with the lines of this Japanese total addressable market is the next one, where they show the yield curves for Japan, Germany, the US, and the UK. We see that the Japanese yields remain far lower than any other countries, especially on the shorter durations. It is well known that Japanese investors have been starved for yield for a very long time. And now Metaplanet is coming out with these preferreds that are yielding, or that we think they're going to yield about 6%. And that's just going to bring a lot of interest from the Japanese investors. Metaplanet is hitting the right spot here, I believe. And yeah, I think the Japanese market is ripe for disruption with these new securities that Metaplanet is trying to bring out. What I found interesting is that about a month ago, Simon Jerovich was visiting Switzerland, and he posted something on X about it. And Switzerland is a country in a similar situation as Japan. Switzerland has roughly the same low yields as Japan, and actually the Swiss National Bank lowered the rate from 0.25% to 0% mid-June, so about 2 months ago. And he mentioned that he was talking to investors, and that was on Richard's Byworth podcast, which I will link below in the show notes. And I would expect any entity that comes with such products as Metaplanet, like the preferreds, and they bring them to the Swiss market to have the same amount of potential interest as in Japan. So I do hope something is happening behind the scenes to make that happen. I think that would be super interesting to see Metaplanet expand to the Swiss market, especially considering that both countries have the same yield environment, and it could be a potential synergy. Note that there has not been any further communication on this since the podcast. So I hope we hear something about it in the near future. All right, so maybe let's go back to our preferreds for the Japanese market. So the next slides for me were by far the most interesting ones, in my opinion. Metaplanet shows here where their preferred sit in comparison to the Japanese government bonds on the yield and the duration aspects. we see that Class A and Class B would mainly be competing with the 20 plus years JGBs. What is interesting is that they expect Class A to have a greater yield than Class B. And I'm not sure if that's done on purpose or not, because in their initial communication, and as I showed earlier, both should have the same initial yield. It could be a representation of the yields after the yield fluctuation or after they start trading at a more stabilized price. We'll have to follow that closely to know more. What I think is most fascinating, and I think everybody is probably thinking the same, is that they showed some of the future preferreds and how these compete with the lower duration JGBs. But if we go to the next slide, then we can go deeper into those future preferreds, because here they show their whole arsenal they're trying to come out with. So in this slide, they present their instruments and future instruments allocated according to their seniority and volatility. So they show the common equity all the way down in the capital stack and with the highest volatility. They also show the preferreds Class A and Class B, with Class A on top of the capital stack and Class B junior to Class A, and actually a future preferred that is called Senior Variable Dividend Perpetual Preferred. And I really hope they come with better names, because in my opinion, this is not sustainable. However, from the name, it looks like it's going to be the equivalent to Strategy's STRC, so fixed or stable price, variable dividend, and perpetual. So it looks like all their preferreds announced here are perpetual, meaning that they will not have to repay the principal ever. They will only have to pay the dividends in perpetuity. And they have 3 other preferreds, junior to Class B, but senior to the common stock. Looks like they're going to issue a medium duration with variable dividend, so an STRC-like product with a bit more volatility, and third place in the capital stack from the top, just below Class B. A high yield fixed dividend convertible perpetual preferred, so it's like a Class B, but lower on the capital stack and without guarantee of dividends, and a high yield fixed dividend perpetual preferred sitting just above the common on the capital stack. Basically, it's like a Strategy's STRD, where it's supposed to act like a junk bond. And we can also quickly look at the next slide, where we can see with the colors chosen for each security, and based on the previous slide as well, presented, that Class A in green is Strategy's STRF, and Class B in blue is STRK, as I mentioned in a previous episode. So they made it quite clear here. I really like that they showed their roadmap, because investors on the different instruments know directly where they will land in Metaplanet's capital stack. Unlike in Strategies, up until now, Strategy, as they come up with the new instruments, they move the investors in the capital stack. So I really like that that Metaplanet is transparent with that. And I like that they're calling their shots in advance, as Dylan puts it. Another thing that I find interesting is how Metaplanet is following Strategy's footsteps, but at the same time, they're also improving on some things, right? And in this case, just showing already the preferreds they have in mind that they want to issue next is already, in my opinion, some improvement in terms of communication. And although I'm pretty sure there's going to be more preferreds, or other securities later, I think that's a great way to communicate what's coming up next. All right, the last point that I found interesting from Metaplanet's side is their communication as to their target percentage-wise of preferred issuance that they're aiming for. And for that, let's have a look at the next slide. So here you can see that their total preferred issuance target is 25% of the Bitcoin NAV, which is fairly conservative. Nice to see that, especially if you start looking at the total enterprise value. And they also point out in this slide that their goal is to pay the dividends from their operating business. And I suspect the reason for this is that Metaplanet is a bit fearful that they will be considered a Ponzi scheme. So currently, many people are claiming that strategy is a Ponzi scheme because of the way they pay their dividends by selling either their common stock or other preferreds, meaning that the new investors come in to pay the older ones. Here we have created a video explaining why strategy is not a Ponzi scheme, so feel free to watch and hear our arguments why it is not. In any case, I think it's very smart of Metaplanet to come out with this announcement. All right, just to wrap it up here, one thing that I did not see was any messaging on what's going on regarding their US entity. And I would love to have known a bit more about what's going on there. But I guess we'll have to wait on that one. Otherwise, I like what Metaplanet is doing and how they're communicating overall. I like that they're taking the best of strategies, innovations, and how they're trying to improve on them when they feel actually it's necessary, right? Sometimes it's not. On top of everything, they have a great jurisdiction advantage in Japan, as we already know, for their common shares due to the tax reasons and for their preferreds due to the very low yields. And based on how fast they move and how well they've executed, I wouldn't be surprised to see them overtake again some of the top spots and become one of the top 3 Bitcoin treasuries in the coming months or year. So buckle up, and yeah, thanks for listening. See you on the next one. Cheers.
How many chairs are you sitting on right now?